Let's kick things off with a little trip down memory lane. The 1970s weren't just about disco and bell-bottoms, it was also a golden age for, well, gold. We saw one of the largest bull markets in precious metals history. Gold increased a staggering 25 times in value, while silver outperformed even that, shooting up 41 times its original worth. To put this in perspective, imagine if you'd invested $1,000 in gold at the start of the 70s. By the end of the decade, you'd be sitting on $25,000. Not too shabby, right? And if you'd put that same grand into silver, you'd be looking at $41,000. That's the kind of growth that could change lives. Now, you might be thinking, sure, but that was half a century ago. What about now? Well, hold that thought, because we're going to connect the dots between then and now. Fast forward to more recent times, and we've seen the rise of cryptocurrencies. These digital assets have managed to outpace even the impressive gains of the 70s precious metals boom. Bitcoin, Ethereum, and others have made some early investors millionaires overnight. But here's the thing, with great reward comes great risk. The crypto world has been plagued by scandals, with FTX being a prime example. These incidents have cast a shadow of suspicion over the entire sector. Now, don't get me wrong, I'm not anti-crypto. In fact, I hold some cryptocurrencies myself. But when it comes to stability and tried and true value, I lean towards gold and silver. So why this preference for shiny metals? To understand this, we need to look at the history of money itself. Gold wasn't just a pretty trinket, it was once the backbone of our monetary system. And for good reason. Mining and refining gold requires substantial labor and resources. When you exchange gold for goods or services, you were essentially trading the value of that labor. It was a fair exchange backed by real effort and scarcity. Now, let's contrast this with our current system of fiat currencies. These are essentially created by banks out of thin air. There's no labor involved, no inherent value, it's just numbers in a computer or paper with fancy printing. From this perspective, fiat currency can be seen as a form of dishonesty, even theft. We're exchanging our hard work for what exactly? Promises. This brings us to a crucial point: how our current monetary system can be viewed as a tool for economic enslavement. Strong words, I know, but hear me out. When we operate in a fiat currency system, especially one heavily reliant on loans and credit, we're essentially monetizing our future labor. Think about it. When you take out a loan, you're promising to work in the future to pay it back. You're trading your time and effort for an IOU. Now, this might not seem so bad if the currency held its value, but here's the kicker: the US. Dollar has lost over 97% of its purchasing power since the Federal Reserve was established. That means the dollars you're working so hard to earn are worth less and less each year. Let's bring this into recent context. During the COVID-19 pandemic, we saw an unprecedented expansion of the currency supply. The M2 money supply, which includes cash, checking deposits, and easily convertible near money, increased by a whopping 40%. Now, basic economics tells us that if you increase the supply of something without a corresponding increase in demand, its value drops. This is exactly what we've seen with inflation skyrocketing in the aftermath of this currency creation spree. In response to this inflation, central banks have been raising interest rates at a pace we haven't seen in decades. While this is meant to cool down the economy and curb inflation, it's a delicate balancing act. Push too hard, and we risk tipping into a recession or worse. This rapid shift from ultra-low interest rates and massive currency creation to high rates and tightening policies reminds me eerily of the lead up to the 2008 global financial crisis. Back then, we saw how quickly things can unravel when the financial system is under stress. But here's where it gets even more concerning. The U.S. national debt is at historic highs, and a significant portion of this debt needs to be refinanced regularly. With interest rates climbing, the cost of servicing this debt is going to skyrocket. This could put immense strain on the federal budget, potentially leading to cuts in crucial areas, or more likely, even more currency creation to cover the shortfall. Now, let's talk about how all of this affects you and me. Inflation is often called a hidden tax, and for good reason. When the currency supply increases without a corresponding increase in goods and services, each unit of currency buys less. Your salary might stay the same or even increase slightly, but if prices are rising faster, you're effectively getting poorer. This makes life more difficult for the average person. Suddenly, that grocery bill is higher, filling up your car costs more, and forget about saving for a house. The goalposts keep moving further away. So where does this leave us? This is where we circle back to gold and silver. In times of economic uncertainty and currency devaluation, precious metals have historically served as a store of value. They can't be printed at will, they require effort to produce, and they have stood the test of time. Now, I'm not saying you should go all in on gold and silver. Diversification is key in any investment strategy, but considering adding some precious metals to your portfolio might be a prudent move in these uncertain times. As we wrap up, let's recap the key points. We're in a period of significant economic uncertainty with parallels to past crises. The rapid expansion of the currency supply and subsequent interest rate hikes have created a volatile economic environment. Inflation is eroding the purchasing power of fiat currencies, making life more challenging for many. While cryptocurrencies offer potential high returns, they come with significant risks. Precious metals, particularly gold and silver, offer a time-tested store of value in uncertain times. Remember, the goal here isn't to fearmonger, but to encourage you to think critically about our economic system and how to protect your financial future. Do your own research, consult with financial advisors, and make informed decisions. That's all for today, folks. If you found this video helpful, don't forget to like, comment, and subscribe. And let me know in the comments, what are your thoughts on the current economic situation? Are you considering investing in precious metals? I'd love to hear your perspectives.